Today, we're going to talk about something very important because what's happening in the market right now is not a coincidence. On one hand, we're seeing pretty clear signs that the economy is cooling down, bonds are falling, money is becoming more expensive, energy prices are rising, and consumer spending is starting to weaken. All of this points towards something that may be closer than it seems, a potential recession. But here's where things get interesting. While all of this is happening, Bitcoin is not dropping the way many people would normally expect. For me, it's more of a warning sign. When something should fall but doesn't, it's not always strength. Sometimes it's preparation. And this brings us to a key concept, the bull trap. The market holds steady, maybe even moves slightly higher, creating a sense of confidence. Then, just when most participants enter feeling safe, price reverses and drops aggressively. That's a bull trap. And right now, Bitcoin's behavior fits that scenario quite well. It's not clearly breaking resistance, but it's not crashing either. It's stuck in a strange middle zone, a zone where the market typically confuses the majority. In other words, a zone of uncertainty. Now, let's look at the Bitcoin chart, because this is where the clues really start to appear. I think I always begin with the basics, price action and candlesticks. When I see long wicks around important levels, I immediately pay attention. That usually signals rejection and often anticipates a move in the opposite direction. Recently, we saw a very clear reaction around the $65,000 level. As I mentioned in the previous video, I expected a drop toward that area before the recovery we've just seen. A move back into the range between roughly $6,000 $70,000. And that's exactly what happened. We saw a strong reaction at 65K indecision candles, and this typically means strength is being built. The market isn't inactive, it's preparing. Here's the important part. Markets don't move on their own. Institutions move them. And institutions don't make sudden moves. They accumulate slowly, quietly, without attracting attention. They create movements that look natural while building liquidity. Meanwhile, retail investors react emotionally, and that's where they lose. Volume reveals most of the story. When price reaches key zones and volume increases, that's where decisions are made. A strong upward move when liquidity finally enters the system and assets like Bitcoin and crypto can accelerate significantly. But right now, we're not in that final phase yet. If you enjoyed the video or got value from it, drop a like and subscribe if you haven't already. Take care, and I'll see you in the next one. Stay sharp.